Hello there, everyone. Tim from Alpha Wolf Trading, also known as Vegas Trader 66, coming at you with this week's market wrap and sector watch. What a great week it was. Bulls remain in control. Earnings season actually turning out to be fairly decent. The Trump rally, as some are calling it, continues. Bulls are in control. Now, there are some out there that are calling for a black swan event. They're looking for some kind of a pullback, but there is a tremendous amount of strength out there in the markets. So, NASDAQ climbing to a new all time high. Uh, a nice consolidation. We broke out. We are coming up into the Bollinger Band. Could we see, we are overbought. Could we see some type of a pullback? Absolutely. Could we see a parabolic blow off top? That's a possibility as well. Look, it has been a long time since we've had a big correction in the market. Seeing a 5 to 10% pullback would not be all that terrible. I think it actually would be a pretty positive thing for the markets. But NASDAQ tech looking strong, looking like it actually wants to move higher. Let's take a look at some. Well, we'll just go ahead and move right down the list here. Take a look at financials. Actually, just broke out this week over a pretty important area of price resistance. We took out 43.80. We actually closed right at 44. Now we are piercing this upper Bollinger Band. What acted as resistance, we want to see act as support. And maybe this first attempt isn't the right time. Maybe we get a pullback here to 40.50 or so, where we've seen some price support, or maybe we just consolidate right here at this 44 area before we try to move higher. But financials looking pretty healthy, looking like they want to move higher. On the flip side of that, the FAZ, which is the bear ETF, has broken through support to the downside. So I would not recommend being very bearish in the financial sector at this particular point in time. GDX, GDXJ, GLD. Interesting moves in gold and the gold miners. Maybe we see some continued strength. We finally broke over the 100 EMA, but we are below the 200 simple moving average still. So I think that is something that you need to be aware of. Now, GDXJ, on the other hand, we are above the 200-day. We pierced the upper Bollinger Band, consolidating. We're pulling back and seeing if this 200-day will act as support. GDX, same thing. We're flirting with that 200-day moving average. Now, you need gold to continue to move higher, I think, in order for you to get JNUG and GDX and GDXJ to continue to move higher. But they are flagging out, working off the overbought condition, pulling back into the Bollinger Band and consolidating right on top of, in this instance, JNUG is consolidating right on top of the 100 EMA. We've got the 200 EMA up here at around $15. So if gold continues to rise, JNUG and Nugget, again, Nugget is doing the same thing as JNUG, sitting right on top of this 100 EMA. The 200 simple moving average is up here around $17.70 or so, $17.50, let's call it. Could be a good target price. But going to need some continued strength in gold. And on the flip side of that, what we keep an eye on is the strength of the dollar, which was in a downtrend for a little while here, and we just broke back over that short-term trend line, reclaimed the 50 EMA. We're now sitting right on top of 26, and right on top of that 50 EMA, we've got the 50 SMA overhead. We'll see if we can go up and test that, maybe take it out, and start to climb back up into this 26.75 area. If the dollar does start to strengthen, or continue to strengthen, then you're going to likely see some pressure on gold and those gold miners. Oil has been in a sloppy consolidation for a while, broke below the 50 EMA, came down, test the 200 day. 11 has really kind of been the line in the sand for support. And now here we are bumping up into this trend line. We'll see if we can take this trend line out and maybe climb back up to the $12 range with oil, or if we wind up pulling back and testing this 11 as support once again. But oil just in really a kind of a sloppy consolidation mode. Did have 3 days of an up move, gap higher, and then not a whole lot of follow through. But we'll see what happens next week at this area of price resistance, if we wind up drifting down or if we can actually break out a bit. If we break out, then that's going to be really great for some of the oil names, which I have not been a fan of over the last couple of weeks. That sector of all the sectors has been little weak, so we'll see if that turns around over the next week or so. IBB, beautiful move over the last couple of weeks. So, we broke out over this shorter term, or actually long-term downtrend, and consolidating right here in area of potential price resistance. Let's call it 286. Consolidating, and what would like to see this continue to consolidate, right? Continue to build a base sideways, and then maybe we get a breakout to the upside and we go up and test that $300 mark again, and see if maybe we can. Likely going to have some resistance here at 300, right? It's been a big area to try and get through. We pierced it up here, and then we wound up giving it all back, and now we'll see if we can go back up and test it again. Maybe it acts as resistance, and this time maybe we can flag out a bit up in this area of 300 and then take that out. Let's see, IWM has been bouncing in between two areas of support and resistance, and basically we kind of hit it again on Friday, right? We came up into this 130, let's call it 139. If we can take 139 out with some conviction, then we're breaking into some new all-time highs. And I think, we get some pretty nice action in the small cap space. 133 has been acting as support. 138, 130, actually, yeah, 138 has been acting as resistance. Like I said, if we can take out 139 with some conviction, I think small caps could be a very interesting place to be, especially after we built such a nice base sideways, right? If we break out to the upside, I think we could have a pretty nice little run in small caps. All right, let's keep moving on here. Let's take a look at the transportation sector, which was in a little bit of a short-term downtrend. Got a little pop, got out of the upper Bollinger Band, pulled back, and now working our way back higher again. Our area of potential price resistance comes in at about 171. If we could take that out with some conviction, maybe transportations get a little action. Worth keeping an eye on. Let's take, look, Labu consolidating, might need a little, the longer IBB consolidates, the longer Labu will consolidate, and it would be a healthy thing to see happen. If we could just consolidate a little bit here and build some type of a base to move from. If IBB does break out to the upside and you don't have a particular biotech stock that you'd like to play, take a look at Labu as a potential trading opportunity. LABD just broke down through some support and looks as though it kind of wants to head lower. So if you want to short the IBB or take a short bias position, LABD could be something that would intrigue you, worth taking a look at. All right, let's take a look at SMH, which has been a very clear winner, very clear sector that has had a tremendous amount of strength for quite a while. And, here we are basing out again just below $76 holla. If we can take out 76 with some real conviction, looks like we'd probably be heading to more all-time highs in the SMH. So a little bit of a pullback on Friday. Look, it was overbought. We're pulling back, working off that overbought condition, but the price is actually holding up fairly well. And maybe we pull back to 74 or so, that finds support there, and then we get a bounce. But this action is healthy, nice consolidation. We've got all the shorter term moving averages sloping up. We've got the 200 days sloping up. SMH still looks incredibly strong. S&P 500, we broke out of a range. We broke out of a area of price resistance. We're now over 2,300. Piercing the upper Bollinger Band, right? So it wouldn't be a big shocker if we were to pull back. We are overbought. It wouldn't be a big shocker if we were to pull back. But now what we would like to see is we would like to see us pull back to this 2,300 and have that act as price support, right? 2295, 2,300, somewhere in that area. If we lose that, then maybe this area that acted as price resistance at 2280, maybe that becomes the area of price support or a potential bounce spot, right? If we pull back and test the 50 EMA, SMA, we're looking at a pullback to about 2265, somewhere in that area. Okay, so S&P looking pretty strong. It is piercing the upper Bollinger Band, so wouldn't be a big shocker if we were to see a little bit of a pullback there. All right, let's take a look at uranium has been a sector that's been catching some momentum lately, and would look for that to potentially continue. Now we are getting overbought, so and we are coming up into an area of price resistance, somewhere around 1850 or so. Let's call it 18 bucks. No, let's call it 1850, right? 1850. We may move back up into that area and then find some resistance and pull back. We'll see what happens. But uranium, I think, is a space to keep an eye on. There are several small names within that space that have been really beaten up. UEC, URRE, LTBR, getting some action there as well. So as uranium prices continue to climb, then you can look for those names to also appreciate, and probably a sector that you want to keep an eye on. All right, let's take a look at aerospace and defense. Nice breakout, piercing the upper Bollinger Band. So, finally broke out over this area of price resistance. Let's call it 6650. Let's see if 6650 can now act as support. Now, we are overbought. We had an attempt back here to take this out and wound up closing below. We did close above it, but let's see if we can consolidate in this area now, work our way back into the Bollinger Band, work off the overbought condition before moving higher. But aerospace defense looking pretty good. Jim Cramer, actually one of the stocks I do have on my list for this week. Actually, I have a couple of stocks in the space. They were on my list, I think, last week as well. But I think the space is looking pretty good. And I will be going over those stocks on Sunday, 8 a.m. Vegas time, on Ticker TV with next week's stocks to watch. Come check it out tomorrow if you have the opportunity. Let's see what else we've got going on here. Home builders. Home builders actually had a nice little pop, 3-day pop. Been holding up over this cluster of moving averages, specifically holding up above the 200 SMA. So, put it in a nice little base there. We've got a 3-day pop. Maybe this gets some follow through and continuation. There are also a couple of names in the home builder space that I would like to get involved in, more for a longer term swing or potential long term hold. And those actually have not reflected the move that we saw in XHB. Actually, one of them has been going in the opposite direction, but I think the space is something to pay attention to coming up into the spring season. Let's see what else we have going on here. XLB, sector materials. Have a couple of names in this material space that happen to like quite a bit. got a little pop over this short-term trend line. Popped out out of the upper Bollinger Band, pulled back on lower volume. Now we're breaking out over that little trend line. We've reclaimed the shorter-term moving averages. See if we get any follow-through or continuation in that space. The XLE energy space. So we did get a little bit of a bounce as oil bounced. We got a 3-day bounce in oil. We got a 3-day bounce in XLE. If oil finds resistance up at that trend line and XLE finds some resistance here, we could just continue this downward trend. We'll see what happens over the next week or so. XLF, we already talked about the financials looking pretty strong. Potential continuation. XLI, industrials, actually coming right up into an area of potential price resistance. Let's call it $65. The $65 holla could act as resistance. It's up a couple of days in a row. It is nearing overbought, but the space still looks pretty healthy after a nice long consolidation. Then we broke out, hit this, got out of the upper Bollinger Band, worked our way back in, and here we are, back up testing that price once again. XLU, utilities. So utilities have been really bouncing up against this 200-day several times, right? We've got the 200-day simple moving average. It comes up, it pierces it, it pulls back. It tests it, it pulls back. It tests it, it pulls back. And now we've got this little cluster, right? We're testing this. I mean, look, 49.50, if we take 49.50 out with some conviction, utilities could be in play. It really seems like it wants to get back over that 200-day, but we'll see what happens over the next week or so. XLV, healthcare, doing exactly what IBB is doing, right? Which is it had a nice pop, and then IBB is consolidating, and healthcare doing the same thing. I think this is very healthy action, and we've got a clear area of potential support at this 200 SMA. It popped up above it and consolidated. Maybe we consolidate a bit more before we move higher, but I like XLV quite a bit, as that was one of the sectors that we've been talking about over at Alpha Wolf Trading, that we thought this year could be a good year for healthcare because it's been beaten up for the last couple of years. Maybe this is a good sector that we see some rotation into as a value play. Consumer discretionary, pretty impressive little pop last week. Coming up into resistance at 85.70, potential price resistance at 85.70. Piercing the upper Bollinger Band, approaching being overbought. Wouldn't be a big stretch to think we might get a little bit of a pullback. Metals and mining, nice tight consolidation. Looking for a break over 34.50 with some conviction. Maybe that sends the space. XOP, oil on expiration, a little bit of a 3-day bounce, just like oil, and we'll see what happens as we come up into this area of this trend line for potential resistance. And then the last one, retail, 3-day pop. Everybody kind of pointing to a short squeeze rally there in retail. Did manage to close above the 200-day simple moving average. However, I think this is a very risky space to be playing around in. If you've made some money in the space, probably wouldn't be a bad time to lock in some profits. I'm not suggesting you sell it all, but locking in profits never hurts. We'll see how it acts right here at the 20-day moving average. Or no, is that the 100 or the 20? No, this is the 100. So I would be careful with retail. It did have a nice little bounce. You're at an area of potential price resistance here at 44. We'll see if it pulls back next week. But retail is probably one of my least favorite sectors. Let's take a look real quick at what's happening next week in terms of the financial calendar, right? Let's see what kind of economic data we have coming out next week. Let's see. International trade, Gallup, Redbook, Jolts, petroleum status, jobless claims on Thursday, Bloomberg Comfort Index. You know, I'm not seeing anything that's that I'm looking at here that could be that market moving. We've got a couple of Fed speakers on Thursday and Friday. Consumer sentiment, import-export prices, jobless claims, consumer comfort index. I mean, nothing that's really all that dramatic for next week in terms of economic data. We're going to have a continuation of earnings season, which is actually, like I said, actually come in fairly decent. And we'll see what we have to play with next week in terms of earnings. But overall, here's the bottom line. I am still very much thinking that the bulls are in control. It's looking as though we could be moving to new highs. Maybe we do get some kind of a parabolic blow off top. That's possible. But you know, I think, you know, anticipating or trying to anticipate some kind of a black swan event probably is a challenging thing to do. It looks as though the markets want to go higher. Don't chase. It's tough to take things for long-term holds and swings when you're at these lofty valuations. It's probably easier to look at some short-term trades off of technical setups. You know, day trades. You know, short-term swings. It's difficult, especially if the stock is, you know, has had an incredible run. It's tough to take them when they're when they're looking a bit extended. But I still think the bulls are in control. I still think we're going to have some great trading opportunities out there. Like I said, I will be back Sunday morning with stocks to watch for next week over at Ticker TV. Come check it out. Come join us. If you can't make it to that, but you like what I do here, please come check out alphawolftrading.com. Listen, I am not going to be out there promoting my site on, you know, with a bunch of promotional ads. That's not what it's about for me. I don't care if I have 20 members or if I have 2,000 members. I want to attract people that want to learn how to trade, want to learn how to invest, and aren't looking to just make, you know, get quick rich. If you're looking to get rich quick, we are absolutely not going to be the site for you. If you think you can just trade, you know, a couple hours a day without doing any homework, without doing any strategizing, without building a trade plan, guess what? We are not going to be for you. I'm looking for people that really want to take this whole thing very seriously and aren't looking just for a lifestyle, but looking for an opportunity to educate themselves about the markets and having a three-pronged strategy towards the markets: short-term day trading, swing trading, and investing. All of it. All right. So look, if that sounds appealing to you and you're willing to work hard, go check out alphawolftrading.com. Really, the service is ridiculously cheap for everything that we provide. So check it out. And that's it. Have a fantastic weekend, and I'll see you, some of you tomorrow, and I'll see the rest of you again next week.